Good
Good
morning,
everyone.
Hopefully, everyone is online. I'm not sure if we're waiting on anyone else, but that's fine. We will kick it off. So, thank you. Thank you, everyone, for attending on this very drizzly morning that we have here. So first of all, I'm just going to start by introducing myself. So I'm Jo Dunn. I'm one of the partners
here, and we've also got Reilly on board, who's one of the client managers. So if you have any IT issues, if you're having problems with sound or anything like that, please use the chat function, which should be towards the top of your screen, and we've got people that can help out with that. We're also hoping that at the end of the webinar, we'll have some time for some Q&A. So have a wee think of any questions that you might want to run past us. Anyway, so what we're going to do is start with the thought of the day. It's by Walt Disney. I've heard there's going to be a recession. I've decided not to participate. So it's an interesting quote of the day, but as we can see, this would have been quite a few years ago. It's probably been for a lot of us quite a while before any of us have experienced what we anticipate to be a looming recession. So yeah, I just thought it was quite an interesting quote to start with. So we actually have called this webinar Better Business in 2023. So as we're already seeing, 2023 has started with a bit of a bang and a number of challenges. It's one of these things, just when we think we're getting back on track after COVID, we're hearing more and more about uncertainty ahead. We've all heard the warnings of a looming recession. And, you know, some of us are like, hey, it's just media hype, while other people are convinced it's going to happen. The reality is, in the meantime, inflation, interest rates, and the cost of living are continuing to rise. So how do we define success? If we're honest with ourselves, and I take this quite personally, our definition of this may have changed over the past 2 to 3 years. It's almost like that before and after COVID period. We've all seen the ups and downs in the market, heaps of disruptions and uncertainty. So to us, better business in 2023 isn't necessarily about survival, but ensuring we don't have our heads in the sand about what could be ahead, in particular managing risk in our business. So have you recently looked at your business and thought about what would happen if a recession does occur? Are you planned for this? Even if it doesn't happen, at least you will have prepared for it and should be in a stronger position for success. So studies of past recessions, probably including Walt Disney's one, have shown the difference between those businesses that suffered and those that thrived was preparation. If you're unprepared, survival mode kicks in and you might react defensively without analysing what you're actually doing, what decisions you're making. So, hey, we might not be able to decide not to participate in a recession like Walt Disney, but if you do decide to prepare for the possibility and mitigate risk in your business, you stand the best chance of surviving and maybe even thriving if it does happen. So just before we begin, letting you know that this webinar is general information, it's not tailored advice. But if anything comes up that you need more information on, please contact the team at The Outsider. We're always here to help. So the agenda for this morning, we anticipate that the webinar will take maybe 30, 35 minutes. And then, like I said, we'll have time for Q&A at the end. So what we're going to be covering are the 3 freedoms in business, the key risk categories, practical strategies to mitigate risk, building risk management into your strategy, and then next steps. Please just take notes, write them down. If you've got any things that you might want to cover, submit questions. We can cover those at the end. And you should have also received a workbook as well, which is just basically a risk template, and that's something that we can cover later. So we know that many people will be worried about what's going to happen over the next year or two. So we put together this webinar to reassure you that there are steps you can take to minimise the impact an adverse event such as a recession could have on your business and obviously really importantly your family. So first of all, 3 freedoms, and that is something that many of you will have covered before. So what is it if you haven't seen the 3 freedoms before? So we aim to help our clients achieve more mind, time and financial freedom. So when you think about it, mind freedom is sort of having that peace of mind, you sleep at night, you're less stressed, you can enjoy time with your family. Time freedom, that is actually having the time to enjoy the things that you like doing. So it's having a life outside of work. It's doing those sports and hobbies and being available for your family. The third freedom is financial freedom. So that's actually just having the financial resources to be able to do the things that you want to do. Yeah, it might not be buying a pool or yacht. It might just be having a trip away with your family, or just not worrying about the financial side of things. So quite often businesses focus on financial freedom, money, 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 more profit, more cash flow, and greater business value. Yeah, these are all really important. But if we don't manage risk in our business, all three freedoms could be compromised: mind, time, and financial. On the flip side, if you proactively identify and mitigate risk, you'll feel more in control and likely spend less time putting out fires in your business. This will minimize business disruption and provide more time, mind, and financial freedom. So what we're going to be covering here is risk. So risk comes in many forms. Some of you will have seen a diagram like this before. So what we're using here is what we call the 10 hats. So by using the 10 hats, we can categorize risk to determine who in your business should be responsible for identifying, managing, and mitigating each risk. So it doesn't matter what size of your business is, these 10 hats, the structure exists in every business, not just the large corporates. In smaller businesses, you quite often find yourself wearing multiple hats and managing more than one department. Even a partnership or sole trader, you effectively have a director department. So what's the role of a director? Many of you will have covered this before in coaching or whatever, but big thing here is planning and risk minimization and setting the strategy to give the owners of the business, the shareholders, which is possibly you as well, a far greater return on investment and an ability to sleep at night. So while it's the overall responsibility of the directors to identify and manage the risk, there's quite often other people in your business that can carry out the activities that reduce risk. So it's an important note, or important principle in your organisation structure, that responsibility and doing are not always the same thing. Just as a side note, if you're not clear on who's responsible for each department, the doing will often refer back to you as owners of the business. So not only is it important to have a framework to identify risk as a director, it's also important to understand what your 10 hat structure looks like. So which of the 10 hats are you currently wearing? As you can see, the 7 hats along the bottom, these are busy hats. If you're wearing more than 6 hats over these 10, you're probably very busy, but you also probably have a heightened level of risk in your business, which may explain why you aren't achieving mind freedom. It's really important too to think about what hats you're doing a poor job with. Some of these we love, some of these is a bit of a grudge purchase, might be admin, might be marketing, those sort of things. So, make a note about what hats you're wearing and whether you're the right person to be doing this. Is there someone in your business that you could delegate some of the responsibility to? So at The Outsider, we love running this 10 hats. It's something that we've got a lot of experience with. It works really, really well in small businesses because it does help to define those roles, which does make life a lot easier. Brilliant. So what we're going to kick off with next is, over the next few slides, is we'll share some common risks along with mitigation strategies across those 10 departments or hats in your business. So some of these might be more crucial to resolve in your business than others. So like I said, just take notes if there's anything that you think is a bit of a burning issue. If there's anything that you want to do further work on, obviously contact the team at The Outsider. So hopefully everyone has their coffee on board, but obviously to avoid putting you all to sleep, we're not going to spend too long on each of these. Like I say, make notes and reach out to us afterwards if there's anything you would like to know more. So Aaron is going to kick this off now with strategic risks.
So strategic risk. As mentioned earlier, strategic risk sits with the directors. This is often referred to as working on the business. The directors effectively manage the shareholders' investment in the business. This may be the same people, but not always, and there is a responsibility to the shareholders to protect their investment. Creating time to identify the strategic risks in your business is the first step towards mitigation. These are some of the common strategic risks. So, directors are answerable to the shareholders of their business, and it's their responsibility to ensure the business plan is executed and strategic goals are achieved. They must ensure the business is appropriately structured. They need to manage the senior team members to avoid burnout while implementing the business plan. Litigation. This is an expensive risk and can usually be prevented with proper planning and risk assessment. Then the final point here is the personal guarantees. Personal guarantees should be considered carefully before being offered, with proper advice being sought. These risks are likely to have the most significant consequence if they're not managed. We've only listed a handful of the potential risks, and there are likely numerous others requiring your attention, so it is important you identify the risks most relevant to your business. Do you have regular directors meetings? Even if you're a small business, you need to wear your director's hat. It's a different way of looking at your business, more top-down rather than be buried in all the details. While it's the responsibility of the directors to ensure the business plan is executed, it's up to the leadership, say the CEO or the general manager, to implement the business plan. If you're a small business, then this role probably also sits with you as the owners. They need to identify and manage any bottlenecks and roadblocks. You want to engage the team in the plan and monitor and report on KPIs to ensure the business is on track to achieve the plan. Culture comes from the top, and it's the leadership's responsibility to promote a strong team culture and demonstrate the business core values. Things like team culture can take a hit when the business is perceived to be struggling, or if the owners are perceived to not be engaged. Product, service, development, and development risks. A lot of you will have experienced this in some form or another, with the lockdowns, supply chain issues, changing market conditions. These have rendered some businesses unable to provide products or services, causing them to pivot, close down temporarily, or even permanently. Aside from lockdowns and economic slowdowns, the wrong mix of products or services can mean that cash is locked up in the wrong job and just old stock you can't use. When was the last time you reviewed your stock? You don't necessarily want a fire sale, but sometimes a lot of cash is essentially sitting there in a storage facility. Are your products or services actually making a profit? Have you been back costing on your projects or calculating the gross margin on each product? This could have a huge impact on your bottom line and cash flow. How well do you know what your customers want or need? Is what you're providing fulfilling a need in the market? Has the market changed, and how did you respond to this change?
I'll unmute myself. Just checking you're all awake. So the operations department, this is responsible for generating cash by managing the day-to-day running of the business. Don't underestimate this role. It can be quite hefty and time-consuming, but it is so crucial to the success of a business. Who looks after operations in your business? Because like I say, this is a massive role. So some businesses have inefficiencies in how they operate. For example, some businesses should or could downsize their premises to reflect their hybrid work environment. Maybe a cafe or restaurant with large premises might be more profitable operating from a smaller location with a bigger focus on online takeaways. We've all seen that with lockdown. Fixed assets, so these can be a huge cost for businesses. It might be better to lease vehicles or plant and machinery, or maybe contract out aspects of the business operation. Something we see quite often are building companies. They only do sales and project management, but they actually contract builders to do the actual building work to reduce their risk. Competitors, so having an eye on what the competitors is doing is also important. You don't want to be left behind in your industry. How do your current charge out rates compare with the industry as a whole? When did you last put up your prices? So with inflation sitting around 7% per annum, which over 2 years, since we started the outsider, 14%, and that's a huge amount. And we all know how quickly a year passes by. If you put up your prices a year ago and you're sitting there reluctantly going, gee, can I do it again? Can you afford not to? Intellectual property protection. So this is a big risk as well. Do you have a strong license agreement or terms of trade for customers to ensure you protect your IP? Terms of trade are huge. They're really, really important. So not managing operational risks can have a big impact on your financial position as well as causing frustration and burnout within your team. Brilliant. Cash flow risk. So the number one cause of business failure is insufficient cash flow. Even profitable businesses fail due to not having enough cash. So having access to enough cash is a key feature of risk management. We're not talking about having huge cash balances in your bank, as this is often not possible for business owners. We need the right balance between cash and access to credit. By de-risking cash flow in our businesses, we'll be in a stronger cash position to weather any future storms. probably shouldn't really be talking about today. Bearing in mind that freeing up cash flow is something that we can provide targeted support for. So let's look at some practical ways to free up cash in your business. Firstly, reducing debtor days. So debtor days is a measure of how long it takes, on average, for your customers to pay you. This should reflect your terms of trade. For example, if you've got 14-day payment terms, your debtor days might be closer to 30 days or 40 days. If they're higher, there's a really good opportunity to bring this down, and there's a lot of different strategies and things you can do to help bring in that cash. Think about how much more cash you'd have in your business if customers paid a week after getting the invoice instead of 4 to 6 weeks. Sometimes even a reduction of debtor days of 1 or 2 days can be a huge impact on your cash flow. Reduce supplier terms. So on the flip side, you should also review the terms you have with your suppliers. If your customers aren't paying you for 4 weeks, but you've got to pay your suppliers within 7 days, that's a big delay between when money goes out of your account to when it goes into your account. However, it's still important to look at your supplier terms. Make sure you're taking advantage of any prompt payment discounts from your suppliers. What else can you negotiate? As Aaron mentioned before, reduce stock and work in progress. So having money tied up in slow-moving or obsolete stock is highly risky. Likewise, if you're slow to invoice your work, you run the risk of not getting paid the full value for work you've done, variations, that sort of stuff. Many businesses won't pay you if the invoice don't go out at the end of the month. If you're a few days late, that'll bump you out by another month or so. Reviewing your debt structure. So having too much debt in overdraft or credit cards can put a real strain on cash flow and a real pressure on yourselves as well. If you're constantly in overdraft or you've got credit cards that you can't pay off each month, sometimes it might be cheaper to refinance these into a longer term loan with a lower interest rate, particularly at the moment with interest rates increasing. Things like credit cards, are you aware of what interest rate you're actually being charged if you're not paying them off in full every month? So your personal budget, it's not just important for your personal finances, but it also determines how much you need to draw from the business. So if you can revise your personal budget and tighten it up, you might be able to reduce your drawings and free up cash to support the business and build up a stronger cash position. Look, we know it's tough when the price of everything is increasing, but hopefully it'll be short-term pain for long-term gain. So finally, when you've looked at all of these, you can create an updated cash flow forecast to reflect the changes you've made and also identify periods where there's going to be increased cash outflow and plan for these accordingly. It can also be really good to look at scenario modelling. So what happens if I bring in another team member? How much extra revenue will I need to earn? Right, so I'll pass you back to Aaron.
Welcome back, everybody. Got the mute right this time. So marketing and sales risks. Functions of marketing and sales are to generate leads and convert these leads into sales. A poor return on your marketing spend is a key risk to manage. You should be tracking the results from each marketing campaign, but bear in mind there's always a results lag and that some marketing spend is critical to maintain your brand recognition and presence alone. You should also consider not letting your marketing totally drop off when you are busy, as a quiet period could be just around the corner. If you're still front of mind when the other competitors have all eased off their marketing, you could get some easy wins. You don't want to be throwing your money at ineffective marketing campaigns either. Whether you're looking at engaging an influencer or setting up and maintaining a new marketing channel, consider what your customers want and where they hang out in large numbers. Otherwise, you could do damage to your brand or just waste time marketing to the wrong people. Next is your customer retention rate. It's much easier to sell to an existing customer. So you need to find that balance between impressing those existing customers and attracting new ones. On that note, it's a huge risk to depend only on a few key customers. If one of your customers provides a large portion of your income, it would have a massive impact if they close down or went and found a new provider. A low sales conversion rate can indicate key issues with your product or service, as people are interested in your business, but you can never get them over the line and make them become a customer. This is an essential driver to manage. Providing sufficient training to your sales team is also very important. They're the face of your company, and if they're over-promising and under-delivering, You'll have unhappy customers and reputational damage. You want to educate your team on how to sell based on the value you're offering and make sure they're under-promising and your whole team's over-delivering to ensure a great customer experience. So financial risks. This is where you'd think we sit most of the time. So all of the risks we've discussed so far will have financial implications. But there are other financial risks which the finance department needs to manage. We've already covered off having poor cash flow within the operational risks. And obviously, this is also critical for your finance department. This can't be ignored, no matter how high your profit is. It's important that you put aside sufficient funds to meet your tax obligations. We can help you understand how much you need to set aside for tax. Do you have a separate bank account for tax? Lately, we've been seeing IRD chasing more and more for overdue tax debts. Obviously, as mentioned earlier by Joe, inflation is a large threat, and everyone's talking about this recession, which is a massive risk at the moment. Now is the time to prepare for this possibility, and what you do next will have the biggest impact. With increasing interest rates, you should be looking to reduce debt where possible. This applies to both business and personal finances. Fraud is another risk to all businesses, whether it be internal or external. Admin and IT risks. So lately, we've seen substantial changes to privacy legislation. There's increased obligations on the businesses, and there's more personal information they need to manage. We need to ensure we are always compliant with privacy legislation. Do you have policies that reflect how you expect your people to protect information and ensure confidentiality? We all know about the risks of viruses and phishing scams. As these evolve, the mitigation strategies must too. We need to regularly educate our team on recognising potential scams and threats to ensure we're as protected as we can be. Cybersecurity needs to be taken seriously, particularly if you're dealing with customer data or sensitive and confidential information. As offices move to be paperless, we also need to ensure we have sufficient storage and backups to avoid loss of records or data. These are risks that your admin and IT departments need to keep on top of and implement sound processes to protect your business and your customers' data. So human resources risks. This is the final department that we'll be looking into, and this is HR. You've probably all felt the impact of hiring someone who isn't the right fit for the business. It impacts your time, your mind, and your financial freedoms. Hence, plan to ensure you have a robust hiring and induction process is key. I'm sure you've all heard the statistics previously on the cost of hiring the wrong person, as well as the cost of losing a great person. The multipliers are phenomenal. Retention has been a big issue lately, with businesses struggling to find and keep team members. Developing and maintaining a strong workplace culture is key to attracting and retaining awesome individuals. Having a great culture helps to ensure your team are engaged in what they're doing and are as productive and as effective as possible. Poor management and performance is a big risk in all businesses. When we plan well and mitigate these risks, we can minimize errors and wastage, which is critical in a downturn and beneficial at any time. This links well to the core values. Has your firm got these? Do you live and breathe them? A core values workshop is a great opportunity to really look at your business and what is important to you and your team. Employment disputes and litigation can be costly and time-consuming. Ensure you have proper HR advice for your employment agreements and engage an HR specialist when required for performance management or redundancies. And finally, health and safety needs constant management to avoid costly fines, not to mention team members off work due to illness and injuries. So now that we've shared the different categories of risks and as they relate to the 10 hats, Joe will take you through some resources now that can help mitigate risks specific to your business, the risk register.
Brilliant, thank you, Aaron. So what we're going to look at here is a risk register. So it does look a little bit wordy, and hopefully this looks okay on your screen, but effectively it's a simple Excel spreadsheet. What it covers is the risks that you identify. It's a working document. As you think about risks, you can populate this spreadsheet even with 1 or 2 risks, which can get you started. Hey, what keeps you awake at night? Start with this. So after you identify a risk, it should be added to the risk register with a number, name, date, and category. You can then add a brief but clear description and analyse and assess the risk, giving the likelihood and consequence of it occurring. What you can do then is identify the steps you need to take to mitigate the risk and allocate a person responsible for managing the risk. So let's take a closer look at how we assess the risk level. So this is a table or matrix which helps you assess and prioritise the risks that need to be responded to immediately and order them appropriately. So how this works is the risk is rated out of 5 for the likelihood it would occur, and then out of 5 for the consequence of it occurring. We then multiply the 2 numbers together to get an overall risk assessment between 1 and 25. The higher the number, the more critical it is to respond and mitigate the risk. So a couple of things that came to mind from the hats that Aaron worked through that might be relevant. So maybe you've got one really, really large customer. So what is the likelihood that they leave? Might be quite low. What is the consequence on your business if they were to leave and go somewhere else? That can be significant. So that multiplied out can still be quite a high number. For a business like ours at the Outsider, we are cloud-based, everything's run off the internet. So for us, although we can keep working, what's the risk for us if there's a massive storm? We lose internet, or really importantly, cybersecurity. If we were to be hacked, although the likelihood, fingers crossed, might be low, the consequence for us is massive, significant. So that's going to be a risk that we need to look at in our business. So what you do is identify those risks in that spreadsheet, and then you need to basically assess them, like I say, the likelihood of it occurring and the consequence if it occurs. So by focusing on the red and orange areas of risk initially, you prioritise the most critical issues that need to be addressed. Now, this obviously should be assessed regularly as circumstances changed. So the register should be updated at least quarterly, but referred to in monthly director level meetings. You want to make sure that risks have the correct priority and are being mitigated as much as possible. The risk register should be considered at each strategic and business plan update to ensure there are goals and KPIs set for managing risks. So yeah, we recommend that this is what you do. It's a really good thing to have as part of your toolbox. So where to from how, otherwise known as now, where, how. Where are we now? Where do we want to get to? And how do we get there? First of all, you need to define where you are now. It's possible your current situation is leading to stress or a lack of mind freedom. You might lack a clear risk management plan and are feeling stressed about the potential risks. Or maybe there's warning bells going off. You might feel like you're constantly fighting fires, and that causes conflict between yourself as owners, the team, your suppliers, and your customers. So what might the future look like if you take action after attending this webinar? The where. Overall, you'll hopefully achieve mind freedom through reduced stress and anxiety about what the future holds, with a clear risk management plan with risks identified and mitigated. You'll have processes in place to address risks early, ensure there are fewer surprises, reduce conflict, and better alignment. How? And how do we get to that future situation? So this starts with working with us. We'll provide you after this with our risk identification worksheet to establish the critical risk in each department or 10 hats in your business. It's a great exercise to get you thinking about where you should start implementing risk management strategies. If you don't have clarity on your ideal 10 hats business structure, now is an important time to define this. More than ever, we need to ensure we're not neglecting any departments or hats. Then we recommend developing your risk register and committing to reviewing and updating this regularly so you can focus on those risks with the highest likelihood and consequence. Obviously, the aim is to build risk management into your overall business strategy. As Aaron mentioned before, it's about spending time working on your business, not just in it. This means putting your director hat firmly on and making a plan to respond to risk in your business. The more time you put into assessing and mitigating risks now, the better off your business will be if we do experience economic turmoil. You know, we can't remove every risk, but we can minimise the impact they'll have on our business, our team, and ourselves personally. And lastly, having independent accountability, which I know some of you have already, will help ensure you follow through on implementing your plan. This is something we're keen to support you with. Sometimes it can feel overwhelming thinking of all the potential risks in each of the 10 departments, but focusing on one step at a time will have an impact. You know, you're not alone in business, even if sometimes it feels like you are. If you're struggling with anything in your business, please reach out. If we can't help you, we'll find someone who can. So there's several ways we can help you more specifically beyond today's webinar. So firstly, as I mentioned, we've put together a risk identification worksheet, which helps you work through each department and identify potential risks to be aware of and mitigate. And that, I think, has been sent to you as part of the invitation to the webinar, but we'll also send it out after this as well. If you're keen to set up that risk register, there is an option for a 90-minute or so risk management meeting. So this meeting helps you assess the risks in your business and identify strategies to implement to mitigate those risks and provide a starting point to implement a risk management plan. As you know, at The Outsider, we've got many other services that we can offer, a business planning session, and one thing that we love running with clients, particularly at the moment, is a profit and cash flow improvement meeting. As I mentioned before, cash flow can be quite a massive pain point for a lot of people. Brilliant. So that's it, 33 minutes down. So before we go, I thought I'd share this quote with you. If you don't invest in risk management, it doesn't matter what business you're in, it's a risky business. So make a simple plan today, commit to at least 3 actions you'll take as a result of today's webinar. Write them down and give each action an owner and completion date. Remember, if you need our support, we're here for you. So thank you everyone for attending. Really good to have a good number of people on board. And look, we appreciate any feedback, good, bad or otherwise, or requests for future presentations. You know, obviously face-to-face is always better, but these, you know, webinars do help as well. So hopefully we've given you reassurance that you can prepare your business to be in the best position possible to weather any storm and achieve mind, time and financial freedom. So like I said, if you've got any queries, any questions, put them in the Q&A. But otherwise, Aaron and I will be sitting here waiting for any questions. If there's none, hey, that's fine. Appreciate everyone wants to get on with their day. But yeah, sincerely, thank you from myself and from Aaron for attending. It's, yeah, really, really appreciated. So go ahead with your questions. Don't make me tell a joke. No, that's cool. Look, we won't leave everyone just sitting there staring at us. And I'm not down at the at Mount Cook either, unfortunately. But yeah, like I said, have a wonderful day, everyone. Keep well, keep dry, keep warm, and we'll catch up with you all shortly, hopefully. All right, cheers.
Cheers.